So notice that in this report, the intro we have reviewed. You mentioned the statements, analytical procedures, inquiries, less than an audit, a disclaimer of opinion. Second one, management's responsibility for the statements and for DIM of internal control. Our responsibility is to SSARS of the ARSC of the AICPA, limited assurance and material modifications. And that's the basis for our conclusion. Last paragraph, accountant's conclusion, which is your limited assurance paragraph, and based on a review. I would recommend you remember the phraseology of that last accountant's conclusion because it's important and it does get a fair amount of testing. Of course, what's a day without a mnemonic? It's not a happy day. Instead, a card that was for a compilation. This is something that you should be familiar with. Familiar. So you'll see that mnemonic: statements, AICPA, management's responsibility, inquiry and analytical procedure, and so on and so forth. So nothing special there. There's another mnemonic for you. Specific performance requirements. Now this is kind of interesting, and it actually is going to take up the next 4, 5, 6 pages. It says, as indicated, the accountant is responsible for complying with all requirements of SSARS. The other specific performance requirements associated with the review address, so each of these will be expanded in a minute. So what is SSARS, which is ARC 90? So we're looking at ARC 90 now. What does ARC 90 say about a review? This is kind of like what we talked about, the general principles, ARC 60. Now we're getting to the specifics of ARC 90. It says here, communication with the client, understanding the client's industry, client knowledge, review procedures, analytical procedures, inquiries. So remember, we have to do inquiry and analytical procedures. Now they're going to talk a little bit more under what the codification adjusted or expanded on. Reading the statements, work of other accountants, relationship of the statements to the underlying records, review evidence, written representations, and then finally, let's draft the report. So over the next several pages, each of these elements is discussed. So communication with the client. Basically it says you need to communicate any significant matters with the client in a timely basis. Industry understanding, you need to understand the industry, you need to understand the accounting principles and practices, and you can obtain this either prior to or after you accept the engagement. So, before you accept it, or you accept it and then you go out and get that knowledge, that's fine, either one. Client knowledge, you need to understand the client's business and accounting policies and practices. So it's not only industry understanding, but it's client understanding as well. Review procedures, it says to obtain evidence to support limited assurance through the analytical procedures and inquiries, you need to have an understanding of the industry and knowledge of the client. So again, we already talked about understanding of the industry, knowledge of the client. Now we're saying in order to do your review procedures. What are your review procedures? We learned those earlier. That's your IA, that's your inquiry and your analytical procedures. So these are the things that we need to expand on and say, well, when I say analytical procedures, what do you mean by that? And we talked about it in an earlier chapter, study of data comparisons or relationships, the expectation or anticipation theory. What did you get? What did you expect to get? Like when I analyze my company's numbers, I'll look at my year-to-date. I'll also look at prior years, X1, X2, X3, side by side. I look at a breakdown in detail. If I really want to see it, it's not just the whole year, but let me break it down month by month by month, what they call disaggregated information. So it's my way of kind of analyzing. You're looking at dollar change, percentage change. I'm looking at how many employees I have and how much payroll expense is. And then all of a sudden I have 10 more employees. Well, it should go proportionally, unless I'm just hiring upper level people or I'm hiring lower level people. So there's ways to look at numbers to see if these statements look reasonable. That's what we're doing. Because remember, what we're saying here at the end of the review, we're not saying, in my opinion, the numbers are presented fairly. We're saying, hey, I can't give an opinion. But based on the itty-bitty, teensy-weensy amount of work I've done, I'm not aware of any material modifications that need to be made. I'm not saying they don't exist. I'm saying nothing came to my attention. Based on what? Based on just the inquiries and the analytical procedures, because I haven't done much. I haven't done diddy. I haven't done dilly. I haven't done squat. What's the word I'm looking for? I haven't done, I don't know. Anyway, don't know what the word. So that's what we're looking at as far as the analytical procedures. So I like to equate it like a horse with blinders. When you're doing a review, all you see is the itty-bitty, teensy-weensy amount of stuff in front of you, right? You don't see this stuff here. All I'm doing is an I Korea. I'm just doing the I and the A, the inquiries, the analytical procedures. And what we're saying is I can't give an opinion. That's your disclaimer. But based on the itty-bitty, teensy-weensy amount of work I've done, I'm not aware of any material modifications that need to be made to the accompanying statements in order for them to be in conformity with whatever the financial reporting framework is. All right, bearing that in mind, let's look at some analytical procedures.